there is light at the end of the tunnel. The tunnel sometimes is a bit longer than you would like it to be. But I think we posted today, performance which is resilient in a very challenging environment. So we have improved in Q2 our performance, our comparable sales growth performance versus Q1, but Q2 is pretty much in continuity with Q1. We see the rebound of our OEM and consumer business, while our connected business has been always performing at a good level. But yes, we still are experiencing headwinds in China with enhanced competition, and also in our professional business in Europe. Profit, cash are at expected level, and you will see that our net income has greatly increased due to the fact that we're restructuring, less compared to the previous year. So all in all, yes, a performance which is resilient in a very challenging environment.
Eric, I've had the honour and pleasure of your company for the last 8 years on your journey as well, and probably my most asked question during that whole 8-year period is, what about that Chinese competition? What about that Asian competition? You've referred to it there as well. Are you still finding that the vicious price environment is denting those margins?
We had, at the time of the high inflation 2 years ago, we discussed together also, and we only priced up for what we called the structural part of the inflation, which compressed at that point in time our gross margin. Then our gross margin expanded again, and we are now in a phase where the market has been stabilizing towards, a little bit more of negative price. And it's true that in some countries, especially China and India for us at this point in time, we see on the local markets a very, very strong price erosion, which is linked to the fact that people benefited from the increase of price, and now price are restabilizing. Now, if you look at it moving forward, I believe that with the price of some commodities which is going up, like metals, for instance, or transportation, I think the tension on price should be less strong than it has been, in the first 2 quarters of the year.
Eric, good morning to you. I mean, when you say restructuring costs, then around 9 million euros then in the second quarter, the hope was still that you'd get some progress to get that 200 million in cost savings. How close to that are you, especially with those 1,000 job losses that you had anticipated too?
Yeah, good morning to you, Arabile. Look, we said that we would get the gross benefit of that restructuring plan, 2/3 in 2024, and we will get it, the 200 million gross in full year 2025. And we are pretty much in line to achieve this. I think when you look at the job losses, and the reinvestment that we did in low-cost countries, we are probably at this point in time 80% done on the program, and we will start to see, the run rate of the full achievement of that plan rather in Q4 this year.